We have been abused really for a long time, and we will be abused no longer.
President Donald Trump on Wednesday threatened to escalate the global trade war with new tariffs on trading partners.
More tariffs on the EU. Will you respond to their retaliation?
Of course I'm going to respond.
That's after the European Union and Canada retaliated against his 25% tariffs on all steel and aluminum imports.
The European Union treats us very badly.
During a meeting with the Prime Minister of Ireland, Trump said it was among the countries abusing the United States.
The EU was set up in order to take advantage of the United States.
Including Ireland? Is Ireland taking advantage of the U.S.?
Of course they are.
Canada, the biggest foreign supplier of steel and aluminum to the United States, announced its retaliatory tariffs on billions of dollars of U.S. products starting Thursday.
We will not stand idly by while our iconic steel and aluminum industries are being unfairly targeted.
Canada's Finance Minister, Dominic LeBlanc, said it was a dollar-for-dollar approach.
25% reciprocal tariffs on an additional $29.8 billion of imports from the United States. These tariffs are in addition to Canada's 25% counter tariffs on $30 billion of imports from the United States in response to U.S. tariffs put in place on March 4th.
The EU's countermeasures are due to take effect next month, targeting up to $28 billion worth of U.S. goods.
A Reuters Ipsos poll completed on Wednesday found that a majority of Americans, 57%, believe that President Donald Trump has been erratic in his economic policies in his first weeks in office. That comes at a time that Trump has started trade wars with some of the nation's largest trading partners, including Canada, Mexico, and China. And that trade war and the on-again, off-again nature of it has contributed to significant sell-offs in stocks in the United States and other parts of the world. It's also important to note that the poll found that Americans' top concern, the thing that they really want Trump to be tackling, is inflation and the cost of living. 6 out of 10 respondents cited that as their top goal for him. That's substantially more than cited other Trump priorities, both expressed during his first weeks in office and on the campaign trail, including cutting the size of government, including addressing immigration, fighting crime. And it's also important to note that 7 out of 10 respondents to the poll said they believed that tariffs would push the cost of groceries and other everyday items higher. That's particularly significant because it suggests that members of the public may be concerned that Trump's actually contributing to a problem they expect him to fight.
U.S. stocks bounced back on Wednesday, with only the Dow closing lower by 0.2%, while the S&P 500 gained 0.5% and the Nasdaq added more than 1.2%. Fresh inflation data from the Labor Department showed consumer prices cooled more than expected in February, keeping hopes alive that the Federal Reserve could cut its key interest rate this year. Jason Brown is president of Alexis Investment Partners.
I mean, the boost in the market today is largely because of less severe inflationary report. And so therefore some hope that the Fed put is kind of coming back alive. And we've seen some evidence of that lately. I mean, the market's been in a correction. It's been due for a bounce. It's almost looking for any excuse to try to find its footing. Whether this is the start of a recovery, however, is a little bit premature to know.
Gains were kept in check by the escalation of President Donald Trump's chaotic multi-front tariff war, which has sparked fears of a recession. Meanwhile, lawmakers on Capitol Hill continue to wrangle over a stopgap spending bill in an effort to avoid a government shutdown, adding further uncertainties to the mix. Stocks on the move Wednesday included Intel, which closed up 4.5% before soaring another 12% in extended trading after the company named respected semiconductor industry veteran Lip-Bu Tan as its new CEO. He replaces company veteran Pat Gelsinger, who was ousted more than 3 months ago. And shares of PepsiCo fell more than 2.5% after brokerage Jefferies downgraded its rating on the stock to hold from buy.
The only constant in this unjustified and unjustifiable trade war seems to be President Trump's talks of annexing our country through economic coercion. Yesterday, he called our border a fictional line and repeated his disrespectful 51st state rhetoric. Well, Canadians have made it very clear that we will not back down and we will not give in to this coercion. Canada is not the one driving up the cost of your groceries or of your gasoline or any of your construction. Canada is not the one putting your jobs at risk. Canada is not the one that is ultimately starting this war. President Trump's tariffs against you are causing that. And there are no winners in a trade war. To my European colleagues, we will work together to put pressure to end these tariffs against you too. I'm heading to the G7 Foreign Ministers meeting in Charlevoix, Quebec. I'll be meeting with Secretary Rubio. I will also be meeting with my European and British counterparts. In every single meeting, I will raise the issue of tariffs to coordinate our response with the Europeans and to put pressure on the Americans.
We're hitting back against these unjustified U.S. tariffs. We're not alone in doing that. As Minister Joly said, the European Union has reacted. Our friends and allies in Japan have reacted. The world is reacting against these unjustified tariffs. But let me be clear. This is not something that we want to do. This is not something that we like to do. But it's something that unfortunately we are being forced to do in order to protect our way of living in this country and to protect North America.
As of this morning, the United States is applying a 25% tariff on imports of steel and aluminum. We deeply regret this measure. Tariffs are taxes. They are bad for business and worse for consumers. They are disrupting supply chains. They bring uncertainty for the economy. Jobs are at stake, prices up. Nobody needs that on both sides, neither in the European Union nor in the United States. The European Union must act to protect consumers and business. The countermeasures we take today are strong but proportionate. As the United States are applying tariffs worth $28 billion, we are responding with countermeasures worth 26 billion euros. This matches the economic scope of the tariffs of the United States. Our countermeasures will be introduced in 2 steps, starting with April 1st and fully in place as of April 13th. In the meantime, we will always remain open to negotiations. We firmly believe that in a world fraught with geo-economic and political uncertainties, it is not in our common interest to burden our economies with such tariffs.
It is very disappointing that the US administration has decided to apply tariffs on US steel. The US is a very significant export market for the UK, particularly because it's a high-value market. So the US accounts for 7% of our steel exports in volume and 9% in value terms. As the US puts up barriers to trade for multiple countries, this trade then will have to look for export markets elsewhere. So this diverted material risks ending up in markets like the UK. Now, we're already in a particularly challenging market environment, a highly oversupplied environment, weak demand as well, both globally and in the UK. We face particularly high costs, energy costs as well. And so the last thing we need is both the knock on our direct exports to the US, but also that high import pressure from material coming from all over the world. Every additional, damage that we suffer cumulatively ends up being quite considerable. And this is also a time when the steel sector is faced with, as I mentioned, high costs. It's also faced with net zero targets. We're having to invest, decarbonize. So in the wider context, every additional challenge stacks up.
The region called the Thousand Islands straddles the U.S.-Canada border where the St. Lawrence River runs between the two countries. It draws sightseers from both sides who ride riverboats between the picturesque and castle-like island mansions. But U.S. President Donald Trump's sharp trade measures and hostile words toward Canada are starting to sour Canadian tourists on American destinations.
What we've noticed is a lot of our potential visitors, particularly on the Canadian side, they're quite angry. They're quite hurt by what they see as policy and rhetoric that is attacking.
Corey Fram is the director of the Thousand Islands International Tourism Council and says the change in tone is taking a toll.
From what I'm hearing, and I've talked to travel professionals from the Canadian side, from the Atlantic to the Pacific this week, what they're hearing from their audiences, whether those are readers or whether those are bus tour passengers, is that some of their folks are telling them they're going to vote with their dollars and they're not going to come visit the United States.
Canada and the U.S. have long shared the world's longest peaceful border between any two countries. The two flags could fly side by side. But now Fram says he has had to adjust his marketing.
So what we have done is kind of pivoted to New York landmarks being shown to New York audiences, Canadian landmarks being shown to Canadian target audiences.
Some Canadians say they've canceled planned trips to the U.S., preferring other destinations instead.
I was planning a trip to LA to see a friend. However, we decided to go to Mexico instead.
Zena Oakhill from Calgary spoke to Reuters from Cancun, Mexico. She flew south with her husband after canceling a road trip to Los Angeles.
The constant jokes about annexing Canada, Canada being the 51st state, and that coming from the mouth of very high-level political leaders, just put a very sour taste in my mouth.
Travelers seem to be responding with their wallets. Flight data tracking firm Forward Keys reported new bookings to the United States from Canada have declined about 20% since February 1st, compared with the year-ago period.
In hotels in states that are closest to the border, we've seen a decline in room demand basically since the inauguration.
Jan Freitag is with the data analytics firm CoStar and says Saturday night hotel bookings in border towns such as Niagara Falls and Bellingham, Washington have dropped. United Airlines CEO Scott Kirby said on Tuesday the company has adjusted its capacity due to a drop in incoming traffic from Canada.
We have not seen a significant drop in business yet, only because it's hard to quantify.
Fram told Reuters his tourist season doesn't begin in earnest until the spring.
But with our core season really picking up around Victoria Day weekend in May, that's when we might start to actually see cancellation.